Hi, my name is Lou Gaddis. I'm a clinical professor of finance at Smeal's College of Business at University Park, Pennsylvania. And I'm also the faculty director of Smeal's Executive MBA program in the Philadelphia area. What I'd like to give you today is a framework to think about computing the ROI, the return on investment of an EMBA degree. The framework I'm going to give you is based on the survey data that we could just completed for Penn State's EMBA degree. We surveyed our alumni and we got 92 respondents from the 2018 to 2022 classes. And the data we received is that on average, the 1 year out compensation was 28% above incoming salary. So you can think about this maybe 3 years after starting your EMBA, you have on average, our students had a 28% increase in their base compensation. 2 years out, our students reported a 38% increase from the base salary. So that's another 10% from the prior year. And then 3 years out, our alumni reported on average a 59% increase from their incoming program salary. So a big jump there from 2 years out to 3 years out, another 20%. And then our last data point is 4 years out, there was a very large jump, although we had a rather small sample size in that final year. But there was a 107% increase from incoming. All right, now and what you see here in the dashed lines, that would be the 95% confidence interval that I computed based on the sample data. So what I'm going to do is use these 28%, 38%, 59%. I'm not going to use the 107% to be conservative. Otherwise, the ROIs would look even better than I'm going to show you. So here's the spreadsheet that I developed. I first put in my inputs. Let's say that the program cost, our program cost for the upcoming year is $102,000. Scholarship, let's assume that the person got a $10,000 scholarship, so their net cost is $92,000. And then there was company support of $15,000. So that's going to offset the cost of the program. Let's assume that the incoming salary for a student next year, base compensation was $115,000. Let's further assume that if the candidate chose not to get an EMBA, so no MBA, they would get a 5% increase in salary over the next 10 years, 5% per year. Now I'll compare that to the averages from our student surveys. And what we found, again, is 28% increase 1 year out, 38%, 2 years out, 59%, 3 years out. And I'm not going to use that last observation or last average of 107 to be conservative. And then I just assume that after those 3 years of bumps in your salary above the average of no MBA, the students would then just get 5% increases like they would normally assumed if they had no degree. So down here, I set up a little spreadsheet. This is some of the tools we'll do in my course, by the way, is try to identify cash flows and rates of returns of different investments. But what I did is I listed in year 1 and year 2, we split the $102,000 of EMBA program cost, and then 5-year scholarship was split between 1 year years 1 and 2, and then that $15,000 company support, I put in $7,500 per year. So the net cost for the first 2 years is $39,000 in the first year, $39,000 in the second year. And then you'll notice I have a row here called cumulative net cash flow. And you can see at the end of the second year, you're down $77,000. That would be the net cost of the program, which is the cost of 102 minus scholarships minus a corporate reimbursement assumption. Now the question is, how could I identify the rate of return and compute the rate of return of your EMBA investment? So here's what I did. I assumed this $115,000 salary, if you got no MBA, would just grow by 5% a year. So you can see your salary going from 115 to 120 to 127 to 133 and so on. And I just ended this to be conservative again. It's just was end this at a 10-year horizon, that there's no further benefits after 10 years. Now, using our data, the same person that entered the program making 115 3 years later, right, 1 year out of the program, is going to have that 28% increase from base. So they're going to go from 115 to 147. Notice it's a bit higher than just the normal 5% growth rates. So what we have is a $20,000 delta or incremental cash flow of getting an EMBA over no EMBA. And then the following year, assume that data point that the 38%. So it looks like we had another 10% jump in salaries in that second year out of the program. That's in there. Now the person is making 159 versus 133. So that incremental salary of $26,000. And then the third year, I used that 59%. So that's a big jump. What's that? Another 21% increase in salary in that third year, again, based on our sample. And so at this point, the EMBA graduate using this data is making $43,000 above EMBA or people that chose not to get their EMBA. So this is 5 years out from starting. And then I just let both salaries grow at 5% forever. So calculating the return on investment at the end of the second year, assuming no change in salaries, you're down $77,000. So the question is, what rate of return do we get on this $77,000 investment? Well, on a pre-tax return, you're making an extra 20 in year 3, an extra 26 in year 4, and so on. And so what you see is on the cumulative cash flows, you are down 77 at the end of year 2. Now you're down 57. Year 4, you're down 31, and then you break even between the 4th and the 5th year. So the first thing we can calculate based on our historical data is our graduates, based on these model assumptions, broke even in about 4.5 years. And then the question is, how can I calculate a ROI, return on investment? Well, in my finance class, I give you a tool called internal rate of return. Internal rate of return is a way of trying to forecast an annualized rate of return on an initial investment. The initial investment of this EMBA was $77,000. The returns, or all these positive cash flows in the future. So when we calculate the annualized return on your 77% or $77,000 investment, the calculation that we can show in the classroom, actually, if you join the program, is 35%. So what that means is that on average, you've earned over this 10-year horizon a 35% annualized return on your $77,000 investment. So what I want to give you is just a framework to think about whether or not an EMBA is a good investment for you. And again, it's based on your actual outcomes. So individual results will obviously vary. Many students did much worse and much better than these averages. So I hope this framework was useful.